It looks like it's both an interest rate cut and a reserve ratio cut. Quite possible. The reserve ratio cut is quite clear. That is a half a percentage point, 50 basis point cut. I do not know what the interest rate cut is, if there are any more details available. But this is a package. Rob Subramanian was making the point that it will have to be a kind of a packaged intervention in the market so that the bleeding psyche is stopped at some point in time. And so the rate
cut is 0.25%, and the reserve requirement rate cut is obviously 0.5%.
He was expecting that they might even come with some fiscal announcements, but at the moment, quite clearly, it is the monetary announcement that has come in. And I think it is this is the salve the market was waiting for. Unfortunately, our markets have stopped trading, but maybe we want to pull up the Indian rupee at this point in time. The rupee is trading, still trading. It had already bounced, and I think 66 was already there. The rupee saw its, 66.08. And I think it will settle at 65.75 sooner than we think, probably today itself. In fact, we have a China expert with us. Shaun, the managing director of China Market Research Group, has joined us. Shaun, what's the answer? Will this do to kind of stem the market bleeding, as it were?
Well, it's good to be here. I'm not sure that a cut of 50 basis points for the reserve ratio is actually going to stem the market bleeding. Part of the reason why the markets dropped so much yesterday and today is people are expecting this cut on Sunday. That's when the government usually makes these sort of moves. So by delaying until Wednesday, it seems that the government's panicking more than actually coming up with a smart, well-thought-out process. So I've actually become quite critical of what some of the economic planners in China are doing right now, because they seem to be reacting to the market rather than trying to guide the market.
So you feel they are waffling, Shaun. Therefore, is this a bigger package than just a reserve requirement and a rate cut? Will there be fiscal announcements as well?
Well, I think we all need to take a step back. So the equity markets are plummeting, but the real economy is still doing pretty well. So unless the equity markets continue to present a potential systemic risk, I don't think the government should launch a major stimulus plan. Unemployment is still pretty strong. The big concern right now that we all have to wonder is, A, how much of the profits from the corporate side in China have been due to stock market gains in the last 6 months rather than real profits? And two, even more importantly, how many companies have used their shares as collateral for margin financing so that they could invest in the stock market? So if B is really quite negative, then we have a systemic risk. If B is not as large as a lot of analysts are thinking, then I think the real economy is relatively okay, even though it's definitely going to slow dramatically in the next month or two.
But Shaun, isn't this a little different from what we've heard? We heard a lot of experts saying that in China there is an economic slowdown which was slower than what the world had discounted in the financial markets. That PMI number was the one that triggered all the selling, not really the stock market volatility. The worry is economic, not stock market, at least for the world outside.
Yeah, I think a lot of so-called experts talk well, but they don't provide any proof. I mean, so they've been saying that the government makes up the GDP growth numbers, but they don't provide strong analysis of why that's true, and they don't come up with something alternative. It's sort of like picking up a GDP number out of a hat. So I discount what most of these so-called experts say. If you take a look at it, unemployment is still pretty strong. Okay, it's still quite easy to get a job, and I think the two metrics that people need to look at is not GDP, it's not electricity growth, it's really more recent college grads. Are they able to get jobs or not, which they are, and low-income Chinese. And they're also able to get jobs quite easily with salary increases of 10-15%. If you look at it, university grads this year are asking for about 8,000 RMB a month. That's 30% more than they did last year. These would be graduates from the top tier of universities in China. So, I mean, like, the economy's bad. Don't get me wrong. It's very weak. But you have to sort of detach from the doomsday scenarios from a lot of these economists who are literally just pulling numbers out of a hat.
Okay. Shaun, well, I've just come in a little late. So just to get your final comments on this before we let you go, do you think this rate cut that the Chinese government or Chinese central bank has just announced is enough to stem the growth slowdown that we've been seeing in China, or does the government need to do more?
No, I don't think it's enough. Okay, so I think, I still think there's going to be a lot of volatility, which I've been saying for the last several months here in the equity markets. I think the real economy is on a continued downward trend. I think my concern right now is a lot of multinationals are less interested in investing here. And if that situation happens in a quarter, we could see 6.5% GDP growth. So I hope that the government doesn't take on more debt in the next month. But by the end of the year, in Q4 or Q1 of next year, they might have to increase debt, which is only about 280% of GDP, so it's still manageable. But the government needs to move to sort of reinvigorate the economy right now. But most importantly, they have to build more confidence with investors and with businessmen, because right now people sort of feel like they're doing a checkerboard haphazard type of planning rather than something that's well thought out. And they need to do a better job of communicating their decisions with global investors and businessmen.
All right. Thank you very much, Shaun Rein, for joining us with your perspective. In fact, why don't we cut to CNBC Europe, where European finance experts are discussing whether this move is adequate to stem the bleeding stock markets.
To try to stabilize the markets. Of course, the Chinese market closed at this point, but we're already seeing the market here in the United States move on this news. In the meantime, let's get to Kate Kelly, who's been tracking what hedge fund managers have been doing during all this market mayhem. Good morning.
Good morning, Andrew. It's obviously hard to generalize, but the sense I got from talking to folks yesterday was that while certainly 2 days of market carnage prompted some hedge fund selling, with many believing that the U.S. economic fundamentals are still relatively strong,
All right, we'll go back to that as and when they start discussing about China. But in case you've joined in late, this is the big breaking story that we're getting at this point in time. China has gone ahead and cut their interest rates. They've cut the bank's reserve requirement ratio and cut the deposit rates by 25 basis points. As you just heard a while back, Shaun Rein believes that this is not enough and the China growth slowdown story will continue. But let's get Vishnu Varathan, the senior economist of Mizuho Bank, who joins in. Vishnu, what's the sense you're getting? Are these measures enough to stem the growth slowdown in China?
Well, I think the measures are a start. They would, however, not be enough on two counts. I mean, if you're looking at it very myopically just from a stock market point of view, it's not enough because the last time we had cuts and the last time we staunched some of the bleed, it came back again. And from the economic perspective, real interest rates are much higher now in China for two reasons. One is inflation is low. The other reason, of course, is that the actual lending rates in China are now at a higher premium to the lending rate than they used to be. So China can cut rates a lot further, given if we correlate this back to how weak exports are, how weak manufacturing is, so on and so forth. The other thing, of course, that we wanted to see is something more coordinated, with some forward communication from China, saying how much more stimulus there would be, rather than a stance on prudent monetary policy. So that would also be helpful.
Actually, Vishnu, there are a lot more announcements. There is a 300 basis point cut on reserve requirements for financial and auto leasing companies. Also, there is an extra cut of 50 basis points for what I think is rural lending. I'm not very sure. We're just getting those details. So it's a package of moves. It's a reserve requirement cut generally and for all banks. Plus, there was a 300 basis point cut only for auto and leasing companies. And of course, the interest rate cut applies to everybody, which is a quarter basis point. Will this mean that tomorrow you will see a little bit of joy? Will you see more economic activity? What kind of economic growth are you penciling in?
Of course, I think you will see a lot more joy, particularly given that a lot of these leasing companies were facing particular pain. So it's going to be very welcome relief. Let's not get that wrong. That's surely going to be welcome with open arms. But there's still two things that are a bit off. The first is the fact that this is still a very uneven policy applied across. Almost, it teeters on ad hosiery. It's quite ad hoc in certain sense. So to give it a bit more structure and to give it a bit more context, I think the policymakers could have communicated a bit more about what they're doing and what they plan to do further. And beyond that, the question is this enough to revive? I mean, it's enough as a relief, but for revival of a pickup in growth, I think certainly this needs to be complemented with more support measures for the property market, as well as more support measures for exporters and manufacturers, with the fiscal policy kicking in. So a combo would have been much more effective in the medium to longer term.
All right. But as we speak, actually, there are the Chinese market, of course, is shut, but a whole host of other markets are reacting on the upside. So the European markets are up almost about 4% reacting to the China rate cut. And the Dow futures are also indicating that the start could be on the green side. Vishnu, before I let you go, just a final comment. Whether this actually results in the economy improving or not is a different story. But what about the financial markets, credit markets, equity markets? Do you think this is enough to spur sentiment there?
What it is enough for is it is enough to see a rebound from the sold down levels. So with huge declines, that should see a bit of a buyback. But at some point, the markets are going to pause and ask, what now? And so at that point, if real economic recovery had not come through, then we are facing a situation where we're back to square one to see whether policy has done enough or not.
All right. Thank you very much, Vishnu, for joining us with your thoughts. Important to look at the rupee. It cost 65 and change.
Yes.
Yes. I mean, yesterday we were wondering if 67 is where. Right. Today morning there were people who thought it will open at 67 figure. And now it is 65 and change. Maybe 65 and 99 pies, but probably 66 even as I speak. Okay, no, 65.
No, I think it's been quite strong move, and the options data was predicting that, something like that, because there was aggressive build-up that we had seen.
So almost an hour ago, somebody told me in the forex markets they wouldn't be surprised with the 65, 75 by end of day today. And if they've got an added prop in the form of the Chinese sweetener, then actually at this point in time you can take any your pick. Ruble, Rand, Lire, any of them is up 2% or 1.5%.
One more thing, Lata, the SGX market will reopen, I think, in another 15 minutes or so. The last closing, of course, was 7885, and that is something that we'll be keeping an eye on as well, because most of the other equity markets have surged post this move, and once again reinforces the point that at the end of the day, the global liquidity is still there. There's so many central banks still willing to come out. And the last cut itself from China had taken the rates to the record lows. And this is now cutting even rates even further from there on.
No, let's make no mistake, economies are propped up, do better when fiscal measures improve productivity. But almost always it is the central banks which are the first line of defense.
Since this is now a hot topic on Twitter, Lata, does this put more pressure on Raghuram Rajan?
No, there is pressure on Rajan to cut, but I would assume that having waited so far, he would wait for the September inflation number. Once you wait for the September inflation number, you wait for September 29. No, I was always in the camp that an intra-quarter cut cannot be ruled out after one saw the WPI number and after one saw the fall in crude prices way below $40, because those were his giveaways. In his own trajectory, the July number should have been 4 or above 4. It came at 3.7. In his own calculation, crude has been on an average taken for the full year at $55 plus. So if you're going to take it at $45 or even less, 43 now, it's not the annual average, but if it